And by 1971, all the different type of monies, around the world that were backed up by gold. By 1971, none of the money that were backed up by gold. They were not backed up by any commodity. So what did we have? What do we have since 1971? We have something called currency. Currency is used for medium exchange and unit of account, but it has no store of value. If it had a store of value, it would be called money. So there's a difference between currency and money. And we call our currency fiat. You probably heard that word before. It has no intrinsic value. It's not backed up by anything, but it's legal tender. We have to use it by the government. So basically, we're trusting the government to say that the money they're giving us, or this currency they're giving us, we can use it to buy stuff. So it's confidence in our government. Now, since the internet, most of our money are not paper notes or coins. It's form. Debasements throughout history, debasements of money has always existed throughout history. If we go back to the Roman Empire, as the kings want to expand they had these imperialistic goals, they didn't have enough money to fund their wars. So they started debasing their gold and silver coins by putting less and less gold content, or replacing the gold and silver content with copper. And we start to see the decline of the Roman Empire. So actually, the loss of their purchasing power, the loss of their money, is actually what caused the final decline, or the decline of the Roman Empire, or collapse of the Roman Empire. Another notable example is the Weimar government. So Germany, when it was coming out of World War I, it had a lot of war reparations to pay. So they were at the gold standard at the time, so they could not print enough money to pay back those fees, that loan. So what they did was remove the gold standard, and they started printing a lot of paper marks. And within a very short period of time, they had reached hyperinflation, and their economy had collapsed. So how does our fiat money that we use today, fiat currency, working on our monetary system? Well, we have central banks. Every country has central banks. Central banks are private entities whose business model is to make profit from giving out loans. And they have the license to create money out of thin air, so create new money. And they are the lenders of last resort. So basically what they do is when a government is in a deficit and they need a loan to pay for their fiscal planning, to pay for their defense spending, and other type of obligations like pension and so forth, they go to the central bank to get a loan. And they sell loans. So sovereign bonds are basically future tax revenue of their citizens. Okay? At the same time, central banks also loan out to retail and commercial banks. So retail and commercial banks are the ones that loan out to individuals and small businesses, and they do that to grow the economy. But retail banks also have the license to expand fractional reserve banking. What that means, if I go to the bank and I get a mortgage of $100,000, that $100,000 that I'm taking out as a loan is not existing money supply. Somebody's going to go in there and create $100,000 to loan out to me. So it's newly created money on the promise that I can pay it back. So every time somebody goes to get a loan at the bank, new money is created and new money is put into the system. So you can see the properties of our money, our fiat-based monetary system, is highly debt-based. And since there's so much money or currency being printed for loans for the governments, from loans to the commercial banks, and then commercial banks themselves expand the credit, print the currency, it's also very hyperinflationary. There's more currency roam in the supply. Now, a lot of people call inflation a hidden tax. And when you think about it, it is a hidden tax, because governments take money for their purposes, but at the same time, we're losing our purchasing power. That's what inflation is, basically. They need the money to do what they need to do. They get more money printed, but at the same time, we're losing our purchasing power. So in other words, they're taking our purchasing power away by getting money printed. Now, debasement or inflation of fiat currencies have always existed. If we look throughout history, every currency in the world has hyperinflated. It's, in other words, giving a government like a bank card, a credit card that has no limit, and they don't have to pay it, they just have to pay the interest. So if you give anybody an opportunity to print and create as much money without any repercussions, they will. So fiat currency has hyperinflated to a value of 0. And we're seeing it play out in front of our eyes already. In fact, Voltaire also said, fiat currency, paper money, eventually returns to its intrinsic value of 0. And considering the money we use, the Canadian dollar, or if you're talking about the American dollar or the British pound, they're all fiat currencies. They're going to face the same fate. No fiat currency has ever survived. So, where are we now? What options do we have now? Well, in 2009, a new currency came into existence, a Bitcoin, a cryptocurrency. It's not just a cryptocurrency, but it has a monetary model built up around it. So it functions as money. It has a medium of exchange functionality, peer-to-peer. It can function as a unit of account, and it has a store of value. So money that is scarce has a store of value. This is Jerome Powell. He's the head of the Federal Reserve, which is a central bank of the United States. And he actually called Bitcoin a speculative store of value. So that's why a lot of people call Bitcoin digital gold. So let's compare the scarcity of gold and Bitcoin. So for Bitcoin, we know 18 million coins have been created. And there'll only be 21 million coins. So it'll be capped at 21 million coins that will be created. For gold, there's an estimation about 100,000 to 200,000 tons that have been mined. And there's about 52 tons that are still mineable underground. So we can see gold and Bitcoin are both scarce. However, so they are store value. However, take note how it's very clear how much Bitcoins we have and how many would be created. With gold, it's a little bit estimations, right? And also consider the more exploration you do, you might find more. We might find more gold mines. So maybe it's not. Maybe it's more than 52,000 tons. As for fiat, well, there's an estimated 7 trillion USD of notes and coins circulating in this world today, and there's 50 trillion to 90 trillion in digital form circulating in the world today. So you can tell very clearly that it has no scarcity whatsoever. One very important property of money is hard and sound money. Hard or sound money. Some people call it hard money, some people call it sound money. So money that costs effort and resources to create ensures scarcity. In other words, the harder it is to create that money, the more scarce that money will remain, and the better store of value function it will have. So let's compare gold and Bitcoin. So for Bitcoin, we know 18 million have been mined. There'll be 21 million cap. And the mining rate is mathematically regulated. And that rate is cut half every 4 years. So to give you a better idea, in 2009, every 10 minutes, 50 Bitcoins were mined. So that's the heartbeat of the Bitcoin network. Every 10 minutes, a number of Bitcoins are mined. So in 2009, we have 50 Bitcoins are mined every 10 minutes. 4 years later, it cut down to half. So in 2012, we were mining 20 Bitcoins every 10 minutes. Today, we're down to 12.5 Bitcoins. And in 2020, we're going to go down to 6.25 Bitcoins. And this is going to continue till the last Bitcoin is mined, which is about year 2140, something like that. Now, if we compare to gold, well, we know there's estimated 52,000 tons underground. And there's also an estimated 35 billion tons that's unreachable. So basically, we're talking about like deep sea beds or asteroids. And it's estimated that about 3,000 tons of gold is mined yearly. Now, if you look at it, again, it's estimation, right? We don't know exactly. And a lot of countries are not very clear, transparent on how much gold they mine. They don't share that information. So again, it's estimation. Now, important thing to note here, if the gold price goes up, okay, if the gold price goes up. Gold miners are incentivized to mine more gold, to produce more output. But with Bitcoin, it doesn't work that way. If the Bitcoin price goes up, the rate of mining of Bitcoin does not change. Now, you might say, well, it's a software. It should be easy to change a line of code. What's so hard? We can change the rate, rate of Bitcoin mining. Not necessarily. Bitcoin mining is done with a collection of computers all around the world. So their computing power is what's doing the mining. Their collective computing power that's running this algorithm is called hash power. And right now, this computational power, this complete power, this hash power of the Bitcoin network is 100 hexahashes per second. So that's a significant amount. Okay, so one hexahash is about 1 quadrillion hashes per second. And hash is about 3,000 to 4,000 integer operations. The Bitcoin network is the biggest supercomputer in this world. For anybody to attack it or to manipulate the rate of Bitcoin, the mining rate, have to have 51% of the mining network power. So theoretically, mathematically, on paper, it can be done, but practically, it takes a hell lot of money, a lot of coordination and time, so it's highly improbable. Now, again, if gold price goes up, the gold miners are incentivized to mine more gold. If the Bitcoin price goes up, well, the mining rate doesn't change. But yeah, you'll have miners coming to the Bitcoin network. And what does that do? It just makes the computational power of the network stronger, which in turn makes the mining rate, the whole algorithm that makes the Bitcoin mining more harder to break. So it's a very interesting feedback loop here, where for gold, if the price goes up, they mine more. With Bitcoin, the price goes up, there's more miners to make the network even more secure. So a lot of people say that, yes, both gold and Bitcoin are hard money, but because of the way Bitcoin is designed, it's superior hard money. Now, if we go to fiat, so right now, since 2008, there's been 12 trillion USD equivalent of money that has been printed by central banks. QE stands for quantitative easing. It's a fancy word banks use to thin air. And to this day, banks are printing more. We're at the point the banks have about 500 trillion to 1 quadrillion of derivative assets on their balance sheets. And this is because of this easy money, and it's debt-based. Now, one of the things people fail to really appreciate is how important hard and soft money is. It does affect our quality of life. Depending on the type of money you use will determine what kind of economic model you live in. So we're in the easy money economic fiat model. What does it mean? Well, basically it encourages debt. We are encouraged to take on more debt and consume more. Take on another debt, consume more. And then in a hard money, we are encouraged to save. In the easy money, when you get money in your hand, the fiat in your hand, you know that with time it's going to hyper. So even people that don't even want to get into debt right away, they feel the need to spend that money right away, because if they hold it longer, it won't buy less. It's kind of this loop that you can't get out of, where you take on debt, consume as fast as you can, take out more debt, consume as fast as you can. With hard money, because the money you're holding holds its value over time, you actually take time to decide where to spend your money, and you spend it where it brings you value. And you might decide, okay, I'll spend less now and hold. The companies, when you're dealing in an economic model like that, they'll spend more on research and development than spending their money in other things, because research and development, you're looking to get rewards later. But in an easy money environment, you need rewards right now. You've got to use that money. And I just want to make a note here. You hear this lot of talk about climate change. It's very important. Everybody is talking about climate change, how we're polluting the earth. It is very important. However, it's not just carbon that we are causing, that is causing problems for the climate. There's other toxicities, things that we release into this planet because of our overconsumption. So climate change advocates, they say, well, to solve climate change, we need to increase taxes, or increase taxes so we drive less and fact that if you change your economic model, if you change this consumption, this cycle of consumption, you actually are saving the environment. Nobody addresses that. Okay, the other thing about easy money is these booms and busts. So people get into this mode of taking on loans, consuming, and you've got this economy that sort of gets to heat up. And then at one point, when people can't anymore, they can't spend anything, don't have anything to spend, you get a bust. So you get the economy contracts. So you get these really big booms and big busts. And the actual banks actually manipulate that using interest rates. In a hard money environment, people decide when to use their money, how to use your money. So it's more of a stable type of money velocity. So money flows where it needs to flow at the rate that people want it. It's easy money environment stifles markets. The central bank plays with interest rates. When they want people to buy more, they decrease the interest rate. So that when they see a recession coming, they'll decrease the interest rate. When they see people are spending too much, they increase the interest rate. So they're sort of manipulating people, their buying habits. Where in hard money, it's based on free principles. People decide how they want to use their money. In easy money, you've got that Cantillon effect. Cantillon effect basically means that people closest to the money supply, the first people to get their hands on the freshly minted or created money are the ones that benefit because they get it and they start lending it out to everybody else, and of course they charge a higher interest rate. And whatever money trickles down to the lower people, by then hyperinflation or inflation has already hit. So people at the lower end really can't take advantage of this newly printed money. And because of that, you get these oligopolies. In a hard money environment, wealth is created through productivity. If you can produce a service or if you can provide a service or produce a product that people need, you will make wealth. So it's not based on paper assets. You don't make money from money. You're actually making money from productivity. With the easy money, you also have, since you have unlimited amount of money, you have unlimited amount of corruption. With hard money, since it's limited money to go around, it's limited corruption. We can never get rid of corruption in our society, but you can limit it. And as we've seen all the time with easy money fiat, the economy always comes to a collapse. With the hard money, you've got more stable and viable growth. Every economy goes through cycles. You can't avoid that. But with the hard money, the cycles are more gentle. It's not big booms and big busts. Now, let's see what the easy money has done to our environment, our economic climate today. We're about $250 trillion in global debt, which is about 300% over GDP. We can never repay that back. And if you consider the monetary system we live in today, which you create money, you have to create money out of debt. To get out of this, if we create money, we're just getting ourselves put more into debt. So it's like a cycle. It's a like cycle. You can't really get out of that. And people that are aware of the financial situation and are aware of the current affairs will recognize these headlines. These headlines are clearly indicating that the financial system is coming, the cracks are showing in our financial system because our fiat-based system is coming to an end. So this is the stages of fiat currency. We start off with commodity-based money, which is gold, okay, gold-backed. And then whoever is controlling the issuance of this money starts to debase it for whatever reason, whatever logical reason they can come up with. And then eventually we end up with fiat currency like we have today. It's not backed by anything. It has no intrinsic value. So governments could print and banks can print as much as they want. And then we go into fiat chaos where you start to lose more and more of your purchasing power. And then you get to a point where people lost complete confidence in the currency because it's hyperinflated, and out of that options. And then we do another monetary reform, we go back to the top again. And this cycle goes on and on and on. As we have seen through history, we go through it over and over and over again. I personally believe we are in the West, we're about here. Fiat currency crisis, chaos, because we're seeing trade wars going on, currency wars going on, liquidity crisis going on. We see governments are printing like crazy for defense spending and so forth. So in the West, I think we're experiencing this. And there's a lot already countries that are seeing their currency and already hyperinflation, so we're here. This cycle is estimated about, for Fiat, is estimated about 30 to 50 year cycle to Fiat. So how do we get out of this loop? We go over and over again, how do we get out of this loop? Well, Bitcoin, the other property that Bitcoin has introduced is self-sovereign money. So what is self-sovereign money? Money is decentralized. It's money that's not controlled by any single entity. And because it's not controlled by anybody, there's no intermediary, you can do transactions, you can do borderless transactions as long as you are, and you can transact however you want, wherever you want. And if you have Bitcoin securely in your own wallet, nobody could take it from you, it's unconfiscatable. You want to join the Bitcoin network, mining network, join. If you want to download the actual wallet onto your phone, you don't need permission to download it. And it's transparent. Transactions are on the blockchain. You can see all the transactions. Your names are attached to it. There's a level of anonymity in it, but it's transparent. And it's a secure blockchain. So whatever transactions are stored on the blockchain are secure. They won't change. Now, a lot of people have asked me, and I hear this a lot, a lot of people, especially gold advocates or just purely gold advocates, they ask, what is the intrinsic value of Bitcoin? And it's really hard to answer because you can say a lot of things. Oh, well, you know, it's you can go around capital controls. It gives you can control your money, it's borderless and so forth. But the actual, it's hard to think of one word that actually covers it all. It's my throat, eh? If I'm going too fast, okay, the speed, it's good? Perfect. Thank you. So, where was I at? Yeah, so one word that really exemplifies what Bitcoin is, intrinsic value, is trustless, okay? What that means is that you can be your own bank. You don't need a bank. You don't need to trust a bank to hold your money. You don't need, when you do a Bitcoin transaction, when it's sent across or you receive it, once it's confirmed, the settlement is done. You don't need to ask the central authority to make sure that you receive the Bitcoin. And it's a network verifier. It verifies your transactions. So when you receive a transaction, you don't have to, the person who's sending a transaction, you don't have to trust them that they're sending a real Bitcoin transaction. Once it's been confirmed, it's a valid transaction. There's no fraud involved. So you don't have to trust anybody. You are the owner of that money. You can decide how you want to use it. And in terms of its value, well, people that organically will use Bitcoin for its properties are the ones that are going to actually bring it value towards the end, who's going to decide what the value of Bitcoin is. So it works in a very free market principles. With gold standards, it limits sovereignty. Well, you have peer-to-peer is limited. You can't exactly send gold bars across the internet. And then if you do travel with gold, there's heavy capital controls on it. You really can't travel with a lot of gold on you. And if you have a lot of gold, there's so much gold you can bury in your backyard, right? So you need to trust a third-party custodial service. So you have to trust a third-party custodial. Trust comes in here again, because you hope they don't confiscate it. That even if they say, well, we're a private company where we have the governments can't control us. But if there's a CEO of that company, they can shut down the company and really do whatever they want. So again, you have to trust a third party. For settlements, for large settlements, we live in a global world. Our market is global. You need a third party to do your settlement of gold. And when you're buying gold or you're receiving gold, you have to trust the person sending it to you, because there's such thing as fake gold. So because of gold's physical attributes, it actually it's sovereignty. For fiat, we know it's mint and controlled by central banks. There's currency manipulations. Governments, they actually, if you notice, they try to, on the world stage, when they have these trade wars, they try to devalue their currency so they can have better trade deals. So they're always manipulating the currency we use. Limited peer-to-peer. If you use cash, again, you can't send cash notes across the internet, so you'll have to use digital transactions. You use digital transactions, you can still be subject to censorship and capital controls. And unlimited corruptions that we talked before. And when you're using digital fiat, there is no privacy. So with fiat, you are in complete trust of the banking system. So now that we understand the three different standards, I want to now look at where money is going next, okay, and how the changes are coming in this new financial paradigm fit into these different standards. So where's the future of money? Well, we're seeing a currency crisis occur around the world, and this is because our fiat system is going down. And we see that in the trade wars, we see the hyperinflation in certain countries, we see the manipulation of currencies that governments are doing. And we're also experiencing an economic shift. We're going through a downturn, economic downturn. So you see a lot of the growth moving from some traditional sectors into the new sectors. And the new sectors are actually driven by the fourth industrial revolution that we're seeing in front of our eyes, the digital revolution, the Internet 3.0. So this is very well understood with people. And there's conferences taking place all around the world that are actually discussing what's a new monetary reform, how is it going to reform, using the new technologies that we have. Because we are moving to a global economy that's moving to the digital world. So we're putting more and more stuff on the internet. So there's talk about financial blockchain solutions. There's talk about commodity-based digital currencies. They talk about private versus public digital currencies. So what role does Bitcoin play in this? Well, Bitcoin was the first cryptocurrency to start the cryptocurrency revolution. Into Bitcoin, or 2017, banks and governments are dismissing Bitcoin. It's a bubble. It's not going to survive. People won't need it. And then in around 2018, their tune started changing. And they start to feel threatened. And they say, well, you know, Bitcoin's used by criminals. So they really felt threatened. We are now at the point, in such a short time span, well, now they're saying we have to compete with cryptocurrencies. Okay? If you saw on the internet that's going around, the head of the IMF, Christine Lagarde, just recently said, and I don't know the exact quote, I'm trying to paraphrase here, but she said basically, we know there's a need for cryptocurrency, so we're going to try to compete with them, not so much Bitcoin, but for stable coins, we're going to compete with them. So let's understand what that exactly means. She said we need to compete with them, there's a need for it, but not really Bitcoin, but stable coins. Why did she exactly word it like that? We'll look at that, but the other terms you're going to see now is going to be CBDCs, which are central bank digital currencies. You're going to hear this term, CBDCs, which are digital currencies, and you're going to hear about stable coins. So, there's a lot of talk about governments coming out with their own cryptocurrency, and there's also talk that China, maybe Russia, is going to come out with their own gold-backed cryptocurrency. So maybe a gold standard on a cryptocurrency. And there's also, we see governments trying to compete with stable coins. All these solutions are private. All these solutions are centralized. Okay? So if you look further into it, if it's gold, whether currency or corporate or cryptocurrency is coming from banks or is coming from private institutions, again, is centralized. But would it be fractional reserve? Backed up by gold. Again, you're trusting this private central authority to make sure they don't debase your currency again. So they might say it's backed up, each currency is backed up by a certain amount of gold, and later with time, they debase it. So again, trust is involved. If it's a fiat standard based, well then, again, you're trusting that they won't more than they said they would print, right? So it can very easily hyperinflate. And transparency, because whoever owns the blockchain or whoever owns the distributed digital ledger, these private companies, have control of how to issue the money to. So from a user point of view, it's not going to be very different from the way we use we use our money today. We still could be censored. There can still be capital controls. The only difference is that we'll have a choice of different cryptocurrencies to use, and these cryptocurrencies and digital currencies will be competing with each other. So what Bitcoin did, basically, with this crypto revolution, was basically the old players in this now have to compete with new players coming in. That's all it did. And these new and old players, by having currencies, regardless of whether they call it digital currencies or cryptocurrencies, they have more control of how we use our money. Okay? So if you do Bitcoin standard, it's the only public one, it's the most decentralized one, it is hard money, how it stays as hard money, and it's now people say, well, can banks compete with Bitcoin with their own cryptocurrencies or digital currencies? Well, if they were to compete with Bitcoin, they have to provide the same character Bitcoin does. And if they do that, then there's no reason for them to exist. So in my opinion, they cannot compete. However, they will try very well to market themselves a great invention. You don't really need Bitcoin, you just need us. But nonetheless, they'll be competing with each other. And with these currencies, you may have certain advantages. For example, a lot of the old intermediaries are stepping out. PayPal, Visa have to themselves to fit into this picture. So these big high fees that we use right now may not apply. You might find certain more borderless. There would be some changes. You might even have a point where the government gives you, tells you, or to use a national currency, well, you don't have a bank account anymore. But now just download a wallet on your phone and just buy our currency. So you think this is great. It's like Bitcoin, because I have a Bitcoin wallet, I have a bank wallet, it's the same thing. No, because your Bitcoin wallet, if you have your own wallet, you're holding the keys to it. You're actually, you have access to it. Bank or any corporation is not it's not your money. It's still as bank you have control of it. So this is what we'll see. People really need to understand what the difference is, because I have a feeling that people who don't understand the technology will understand the difference between those two. And of course, corporations and banks could be Bitcoin marketing. So time, by the way. Is it good? Should I keep going?
Continue, please.
Continue.
45.
Okay, good. Okay. I just put this section in before because I want to talk a little bit about outlook and trends. Okay, so we have of the properties Bitcoin has and where the financial paradigm is going in terms of what's going to be offered to us, these CBDCs and coins and so forth. But let's look at Bitcoin, how it's growing, okay? And the trends that we have. So we see more and more censorship and capital controls taking place around the world. We don't feel it so much in the West, but we see countries where their currency system is dying, so they're trying to preserve their wealth, trying to get their money out. And there's a lot of capital controls and other types of censorship. At the same time, in the West, we don't feel that censorship or capital controls, yet we do realize when action with PayPal and Visa, paying these hidden fees. So a lot of people that are more self-aware are starting to realize, well, there is a use case. Now, honestly speaking, very few people are actually using Bitcoins as a medium of exchange right now. And we haven't seen that trend pick up very fast. Yet the option will always be there, considering that we're going to feel more capital controls. We're going to feel more censorship laws applied on us. Now, we are mostly digital. We do most of our transactions in digital form. We do some cash transactions. Cash is still the most transaction. And a lot of countries still use a lot of cash. And we're seeing now countries, governments tell their we just heard where they told if you don't use digital cash, you'll be fined a certain amount. And in India, we saw last year where they trying to eliminate cash, certain denominations. So here's our situation. We use digital cash. We go through all these intermediaries. We pay fees. But in a lot of countries, they still want to use cash. So, and we'll see that war on cash. We'll see governments more and more eliminate cash. And what Bitcoin will do will give us an option to use peer-to-peer transactions as a form of cash. So Bitcoin's replacing that cash. You can see it that way. The other interesting thing is why they want to get rid of cash. Right now, they're giving negative interest rates. So that if you put your money, they actually are taking that. Actually, so we're going to see negative interest rates, and all this I'm talking about is actually the collapse of the fiat system. So you see it more there in the emerging markets, but we're going to see it. Inflation. Now, it's interesting. The official rate of inflation, the government says around 2%. Right? 2%. But the way they calculate the CPI, the Consumer Purchase Index or Product Index, is basically they don't take into account that when you go buy things that we're getting smaller packaging and things are the same price. They don't take into account that if some families were able to eat steak once a week, now they can't afford steak, so they go to ground beef. So their lifestyle is changing. They don't take into account that you spend more money on food than you do on buying TV, right? So there's a site on the internet, and I suggest you go there. It's called shadowstats.com, and it actually calculates the actual inflation rates, realistically speaking. And in North America, it's actually 10%. And I ask you to go to the store and check it yourself. So we are actually increasing, our inflation rate is increasing, and it's only going to increase more. Now, people that are aware of this, people that understand how it works, understand how the fiat system is coming to a collapse, understand that we're going to face more inflation, what they're doing two things. A lot of people are accumulating gold. Okay, because they know gold is a store of value. It preserves your wealth against inflation. A lot of other people are also buying Bitcoin as a hedge against this inflation. Because gold, like I said before, is a store of value. And like, what's his name? Jerome Powell said, is speculative, and Bitcoin's a speculative store of value. There's a difference. Gold, we know how it performs in economic crisis. We've seen it throughout history as a historical record. Bitcoin is relatively new. We don't know exactly how it's going to behave in an economic crisis. But when you look at the potential of Bitcoin, it will grow immensely. So your returns on gold could be a lot more than, return on Bitcoin could be a lot more worth than gold. So gold is seen as a preservation of your wealth, and Bitcoin is seen as an increase of your wealth. Okay? So a lot of people that understand this are hedging with gold and Bitcoin. This is a chart. A lot of people say that, I don't want to buy Bitcoin, or I don't like Bitcoin because the price is very volatile. Yes, this price is very volatile. It's a new market, and it's going to be volatile for a while. It's going to take time before you have more liquidity and the market settles down. But if you ask a Venezuelan, would he rather take his Bolivar or a Bitcoin? He'll take a Bitcoin, because regardless of how Bitcoin is, how volatile it is within a day or within a week, the rate is still up compared to his fiat currency. So it's always in perspective. And another thing to note, one Satoshi, which is the smallest unit of a Bitcoin, Bitcoin has 8 decimal places, right? So the smallest unit of a Bitcoin is more than 7 national currencies in this world. And if you consider that all fiat returns to its intrinsic value of 0, what's happening around the world, we're experiencing, one Satoshi is going to be worth more than just 7 national currencies in this world. This is an interesting chart. Somebody tweeted this out. So basically, the black line represents the value of gold against the German paper marks. Remember, I told you the Germans had removed their gold standard and started printing money to pay for their war fees. So you see how the slope is. And this is very typical of inflation. It starts off slow, But at one point, it just skyrockets exponentially. And then somebody took this somebody mapped the Bitcoin price to USD. So you see how it closely matches, and we're at this point that it's actually, we're a little bit low, but still, when you look back, you see a very close correlation between them. So it's quite interesting to look at. It gives you what Bitcoin is. So, regardless of what governments say, regardless of the rhetoric coming out of the mainstream media and banks and governments, and regardless of price action we see in the market, Bitcoin development is continuing. It's not static, okay? There's new type of solutions coming out that improve on scalability, improve on fungibility and privacy. And at the same time, there's many companies offering products like ATMs, like payment services, like hardware devices. This is a growing ecosystem. Regardless of what we hear in the news, this is growing at a very fast speed. Financialization of Bitcoin. A lot of people say, well, you know, governments are going to stop Bitcoin, or they're going to somehow slow down Bitcoin. Well, if they want to slow down Bitcoin or stop Bitcoin, it's going to be very hard. Okay, because institutions realize the potential growth of Bitcoin. They see the growth in the market. They see the profits. They're seeing all that, and they're stepping in. We hear about Bitcoin ETFs. It's been a while. I mean, they always keep getting declined by the regulatory commissions, but there's still a push for it. We've seen Bitcoin futures come out, right? This is just a start. And these companies, right now, more companies are waiting to step in because they're waiting for regulatory approval. And they're also looking for custodial services because they'll have to buy Bitcoin to provide these financial products. So this is just a start. This is an interesting chart. The dark line represents the growth of the internet. Okay, the growth acceleration of the internet. And then you look at the dotted line, the light blue line, the dotted line sort of predicts the growth of Bitcoin with the Bitcoin users against the internet. So this is, again, predictions. But if you consider that Bitcoin is like, some people call it the standard of money, right, on the internet standard of money. It's quite interesting when you look at this chart. You can see the potential of Bitcoin. Transformation of banking. So banks are going to change. Like I said, we don't know. I mean, I can't predict exactly how it's going to change, but this whole financial system is changing. A lot of people are saying that the exchanges we have today are going to be future banks. I'm not saying tomorrow. I'm not saying in 5 years, maybe longer, but they might be future banks. Also, there's banks. There's a talk in the community, in the Bitcoin community, that they're saying that are close to the financial circles, are saying that there might be, if not already, that will start accumulating Bitcoin on their reserves. Today, banks accumulate gold. They accumulate gold because they know fiat is going to crash, and so gold is a hedge. They do that. So, because gold is a store of value, and because Bitcoin is a speculative store of value, it can give you better returns. It has a potential that there could be some central banks from a small country. If it doesn't happen now, it may happen later, and that bank may, once they publicly announce they have Bitcoin on their reserves, then it'll be a race for other banks to start accumulating Bitcoin. So it sounds outlandish or outrageous. Why would banks accumulate Bitcoin? They hate Bitcoin. Well, when it comes to profit, they will not pass it down. So there's great potential in Bitcoin. So basically, we've seen what Bitcoin can give to us. We've seen how Bitcoin fits into this new financial paradigm, the changes that are coming. What remains to be seen is how the Bitcoin standard gets adopted and how fast it gets adopted. So the best way to really express that is in this quote I found. You don't buy Bitcoin, you slowly migrate to the new global financial system called Bitcoin. Thank you. Thank you. Questions? Yes.
Questions? Yeah.
Okay.
Please take the mic.
Okay.
Comments and questions. So one comment the first tradable currency that was used, it was actually silver, not gold. And that started about 4,000 years ago.
Okay.
And that is actually a much more versatile currency than gold. But oftentimes, you spoke about the gold standard, there's also a silver standard, which underwent the same process in many different economies. Silver became the more utilizable exchange token. In fact, at one point, it was overvalued by the U.S. Reserve compared to gold. So that's one comment. Second comment, all you say is very well taken, but there's one thing that central banks will not like very much. Let's suppose that we did have a non-inflatable currency that would not have any control of the money supply today. What sort of chaos would that create? We certainly wouldn't be experiencing our 10th year of economic growth. The whole notion.
Yeah. What you're talking about is there's a discussion that goes between economics, right? Where some of them say that it's good to have inflation. You need inflation to grow the economy. Okay. Some say no. You shouldn't have inflation. That's the difference between Austrian economics and what's the other one? I can't remember. Austrian and Keynesian economics. Okay.
You're referring to the economist von Hayek. Is that?
I don't remember the name. Probably. So there's a talk that we need inflation to grow the economy. Now, I'm not an economist, so I can't really comment on that. But I do know that the biggest problem in our system is debt. It's not inflation.
Absolutely.
So that's what the problem is. So that's one of the reasons why we're seeing these cracks, right? But yes, you should be able to limit the inflation. That's also very important. So there is an element that needs to be also limited. Yeah.
Indeed. But perhaps a good happy medium would be this stable money
Coin.
supply,
Yeah.
with a little bit of tweaking possible. Because without that, we would have been in a recession a long time ago. Just think about it. All the debt that's piled up. If that debt had to be called.
Yeah.
Is this a question?
This is a lead up to the question. Wouldn't that lead to a tremendous collapse in the economy?
It's a big, nobody has the answer to that. You speak to many economists and they have different views on it. When you learn economics, there's no solution to it. It's a belief of how things should operate, right? And there's pros and cons both ways. So there's really no exact answer to it. But the point that we need to take home is the fact that debt is not good, first of all. And second of all, that inflation, yes, you may need inflation to grow an economy, but there's a limit to that. And the fact that there's a central authority controlling the issuance of those coins, they can do whatever they want. So if they see justified to increase inflation to 10%, they will do it. So that's where the problem is, if you ask me.
Without these negative yield bonds, I'd say the
It's
bubble
crazy.
would have burst a long time ago.
It's still going to burst.
It will.
Yeah.
It always does.
Thank you. You mentioned in your talk about people storing their wealth in Bitcoin and storing their wealth in gold.
Yeah.
How about other commodities like real estate, non-residents storing their wealth in
No, that's a very quick question. Yeah. Again, you have to look at when you start investing in things like, again, I'm not a financial advisor, okay? But I think all of us need to study finance, needs to study economics, needs to study the basic things, even health, right? To take ownership of our own lives. So there's a basic understanding we should all have. So based on my basic understanding, a lot of things, if you look in the market, a lot of things are overinflated. When I was talking about the easy money, right? Where people take on debt and consume, one of the things they've done is taken on a lot of mortgage debt and brought up property value prices. So a lot of people can't afford houses right now. I mean, who can afford it? So if you want to put some investment in, do you want to put into investment that's already hyperinflated, or would you rather wait for a correction? Because yes, property has value. But again, so you have to determine if it's inflated the price or not. So a lot of people are saying gold is not inflated, it's actually worth more. Silver is not inflated, actually worth more. And Bitcoin, well, if you look at the use of it and the potential it has to grow, maybe right now it's maybe less than 6,000 now, 7,000, maybe worth less, maybe it should go down a little bit more before going up, but the long term, you see the potential in it, right? Yeah, so it depends on what you want to invest in. And the other thing is, when you think about money, this is mostly focused on money. You can't use property as money, right? So if you look at some people saying, oh, you know what, I want the investment I want to make is should be in a form of money, so I can actually transact with it. So it depends how you see things, but you also have to determine, is it the right price for it or not at this time? Yeah. Yes.
You said there are some 18 million that have been mined already with Bitcoin?
Yeah.
Okay. How long will it take for the 21 to be mined?
The last one we mined, I think, in year 2140, as I recall,
40.
right? Yeah.
Okay. And do you suspect that at that time, how will Bitcoin become mainstream at that time? I mean, there are people out there that are holding right now, that are buying and not trading or anything, just holding for it to eventually, to increase the value. At what point do you estimate that it will become mainstream and people will be buying Coke with, not Coke, but I mean, look at anything, purchasing anything.
Gum, okay? Yeah. Okay, sorry, what's your question again? When do you think it became mainstream?
That Bitcoin will actually become
mainstream
money.
It's a very good question. I don't know how to answer that. I mean, if you look right now, less than 1% of people actually use Bitcoin or even own Bitcoin, right? I think it's going to take time. And one of the reasons is it's like I said, nobody owns it, right? So people that actually have started using Bitcoin, it's like someone who started investing in Bitcoin or however, are people that have taken their own initiative to actually learn it, first of all. The other people are the ones that actually had no choice. They were in certain economic situations where they had to look for other options. So were forced to look into Bitcoin. Most of us here are still very comfortable. So it depends a lot of where this financial collapse is coming, or this geopolitical uncertainties are coming, actually are the best marketing for Bitcoin. So how fast they play out, I cannot say. But when you look at the long term, when you look back, you say that we are heading in that direction. I don't see, if governments right now start saying, okay, you know what, we're going to let you transact as you want. We're not going to censor you. Your money's not going to inflate. You'll be able to afford the same things. You can send your kids to school and it won't get tough and you won't have any economic stress. And you can live to the same standards you're living now at least. Why would you need Bitcoin, right? Why would you need Bitcoin? But I don't see that happening. And we've seen throughout history that this cycle goes and over and, it just continues. It goes in a circle. And we are seeing the indicators that we're going down into a new reform, right? A new monetary reform. So, again, I think it's not time-driven, it's event-driven. Yeah.
We didn't know the 1870. We go back to 1870 now.
It's interesting. Some people are predicting really like Armageddon, right? And some people are saying, no, it's not going to be Armageddon. I can say, I don't think it's going to be Armageddon, but I think if I can share with you, I listen to a lot of people that are different financial analysts, and not just financial analysts, but they're actually in the Bitcoin community, and they own their different platforms that sell STOs, like security token offerings and things like this. And some of them are very connected to the financial world. And there was one guy, I don't know if you heard Simon Dixon? Nobody knows him. Okay. Well, he's very well connected to the financial world, and he's a Bitcoin evangelist. And he says, yes, like many people, that we are coming to a financial switch, right? We're going to a new monetary reform, a reset, because the fiat cycle is coming to an end. What's going to happen? How are we going to get rid of this debt? Well, people talk about, is the government going to default? If it defaults, that means whatever savings you have is 50% less, and whatever loans you have, you pay 50% less back. So it's sort of equal across the board. So these dynamics are going to play out. The other thing that he says is that what he perceives is quite interesting, is that the central bank is going to let the retail banks fail. Okay? The central bank is going to let the retail banks fail, And basically what they're going to do, because the retail banks are the ones that are giving out the most debt, right? They're the ones who do the fractional reserve banking. So he's going to let it fail and then tell everybody, okay, use our, now this sounds far-fetched, but use our own cryptocurrency. And we're going to whatever, if you have $50,000 in the bank, you won't lose those $50,000. You just make it, we'll put it in our wallet that we give to you that's running on your phone, and it'll be $50,000 of, let's say, Fed coin. So what they're doing is very clever. They're eliminating the debt. You understand? They're not, because it's the actual retail commercial banks that are producing debt. They're from fractional reserve banking. The central bank, it just prints currency out of the air. But it doesn't, they don't create a currency when somebody gets a loan. They decide what they do inflationary. They have inflation, it's based on inflation, but they don't base it on debt. It's not like when somebody goes to get money, they create necessarily. So there is talk that there's going to be major financial changes coming. I don't see Armageddon, but I do feel that people that are not positioned properly are going to suffer. Yeah.
You have no faith in tips either, do you?
In? Treasury
inflation protected security tips.
Well, you know, if the bank is if the government is in debt, $300 trillion, I mean, that's overall, it's household debt and everything. How do they expect themselves to pay back unless we go to a central bank?
And inflate themselves away.
They will inflate at a different level, right? So it's also interesting. Some people say, okay, so when would Bitcoin, if the banks take this step and get rid of the middle people, okay, and say, come to us, we're going to give you a wallet, we're going to replace it equally with this cryptocurrency, but of course we lose our sovereignty. Now the central bank government knows exactly what we're doing all the time, but they get rid of the debt. But then you have to trust them too. With time, another 30 years, we're going to be in the same spot again.
Is all Greenspan's fault in your idea?
Whose?
Alan Greenspan is fault?
You know, it's the fractional reserve bank. If you ask me, the whole system is wrong. Fractional reserve banking.
Would you say we have Volcker instead of Greenspan?
I don't know. It's a big conversation. So yeah. Any other questions? Did I answer your question? I think, Sophie. Okay. Any other question?
So many already person.
Slowly, yeah, slowly. I mean, I'm seeing that there's a lot of changes coming. A lot of people ask, when I do this presentation, a lot of people sometimes get the wrong impression that I'm saying, oh, Bitcoin is it. It's going to solve everything, and it's going to go to $1 million in next year. I don't believe that. I believe that the fundamentals of Bitcoin are there. I just don't know how long it's going to take to play out. Okay, so because of that, I take a more cautious approach and monitoring, and when I can, some people do dollar cost averaging. That's the best option, and that's what you do. But again, it depends on your personal risk you can take. Some people go all in. There's nothing wrong with that. Some people accumulate a little bit gold, a little bit Bitcoin, property, and so forth. It depends on your own risk levels and your point in life. I mean, where do you want to invest your money? But I do believe that Bitcoin. There's this quote I always say. Maybe I coined it. I hope I coined it because I use it everywhere. It's called. I say it. Nothing is for certain, but everything is timing. Do you get that? So I think Bitcoin time has started. It's going to take time, but it has started. But it is an experiment. It's a 10-year-old experiment. But if you consider, look at the growth of those companies. Look at the whole ecosystem, right? Now, banks, they feel threatened if Bitcoin is used as a medium of exchange to get around the capital controls. But if they can financialize Bitcoin, such a point that they make ETFs and financial products and people invest in them, hey, great. We have our medium, we have our currency, use our currency for medium exchange. If you want to, hold gold or Bitcoin, sure, hold it. So I think this financialization of Bitcoin is also like a comforting blanket for the banks, right? So it keeps people looking at it as a store of value instead of a medium exchange to get around capital controls. ETFs, exchange traded funds. Okay, so basically it's like when you want to invest in, let's say, cannabis industry, right? So they take, it's a fund, basically, all those cannabis companies, and they put it together, and you buy this package called an ETF. So it'd be like a Bitcoin ETF. So you might be holding some Bitcoin. So people that don't know how to buy Bitcoin for themselves, or not interested to buy Bitcoin themselves, or even big institutions, it's a way for them to invest in Bitcoin. Now, some of them might be backed up by Bitcoin, like the futures banked, backed up with exchange is backed up by Bitcoin, but CME is not. It's just paper futures that they're playing. And they do have effect on the market, right? On the cryptocurrency market, I think.
Absolutely.
Yeah.
Absolutely. They had a very big effect, actually. That's
Yeah.
that's what my opinion. That's why the price of Bitcoin came down to 20%.
And if you look at the cryptocurrency exchanges, it's a huge market. They're making more money than banks. Binance, I don't know how much billions they made, more than Deutsche Bank, which is the biggest bank in Europe. It's huge. This is not dying. Now, how fast it'll be used as a medium exchange, I can't say, but what the trend I see is more and more people are investing it as a store of value. There's more people holding a store of value than medium exchange, and medium exchange will come when the situation gets worse and people may feel the need that they have to use Bitcoin. Yeah.
They say that approximately 40% of Bitcoin are held by about 1,000 users. What's your opinion on that? Do you find it's a large number?
I don't know the exact number, but I wouldn't be surprised, because a lot of people that got into Bitcoin that have substantial amount were the early adopters, right? So it was more affordable. And now people that are trying to get in, of course, it's expensive for them, so they buy a little bit at a time. So of course you'll have this discrepancy. Yeah.
When it comes to market manipulation, do you think there's like risks that like such a large percentage of Bitcoin are held?
Yeah, yeah, I understand. So he's basically saying in the cryptocurrency market, there's so much trading going on, and we see all this volatility. And there's a lot of talk that maybe these big whales, they call them, that hold a large amount of Bitcoin, they're the ones who are manipulating the market by throwing, putting a lot of puts and calls that cause the market to move up and down. I really think so. It depends on liquidity. It's a 10-year-old market. And I don't have the chart with me, but there's a chart that I have that shows you since the start of Bitcoin, the price volatility. And as you see, it's sort of leveling off, right? So there's a lot of technical analysts that look at Bitcoin price predictions in so many different ways, different models. And they also predict that with time, it will decrease. But what's interesting is that Bitcoin, like I said before, it opened the door for new money-making business. It's a very profitable business, money-making business, to send money, charge for fees back and forth, or give loans. Extremely profitable business. Open for these and do it. These traditional financial companies are now like they have to face competition. We see that when you play in the traditional stock market, there are very few players that can actually get in and start playing the traditional markets. It's hard to get in. The cryptocurrency market allowed everybody trading. It's good or bad, I don't know, but because of that, you see a lot more volatility because a lot of people are not experienced in trading. It's a small market, and you got people that have never traded before trading cryptocurrencies. So it's going to be very volatile. But, in my mind, I'm the type of person that says, you know what? Let people learn. Let them make mistakes. Give more opportunities. By closing doors, saying we're protecting the consumer because we're protecting the consumer, closing the doors, you're actually eliminating people from actually having the potential to make wealth. Now, some of them might lose wealth, but that's life. That's how you learn. You make mistakes. But when you close the door, like in traditional finance, they close the door, you can't trade, you need to be an accredited investor, you have to do this, you have to do that. You're actually closing the door to other people. So that's my opinion. Yeah. Anything else?
Thank you.
Well, thank you. You're welcome. Thank you. Oh, one more thing. So I have a website, okay? I like I said, in 2018, I started training people on how to get started with Bitcoin and get started with crypto. So I welcome you to go check the website out. I have some blogs in there. talk about, mostly I emphasize Bitcoin because I am not against people that trade. If you're a good trader, go for it. I'm a terrible trader, by the way. Terrible. I don't have the emotional fortitude to trade. But if you want to trade, go ahead. And if you want to invest in other cryptocurrencies, I'm not putting them down. Some have value, some don't have value, but you learn from that. But before you do anything, I highly recommend you understand Bitcoin, the technology behind it, and how it works. Because unless you understand Bitcoin, you cannot evaluate other cryptocurrencies. You're going to hear a lot of people say, oh, our currency is like Bitcoin or better than Bitcoin. In fact, the biggest scams we're seeing now is a one token, right? You heard about one token? Billions, 4 billions have been stolen. Even the other one, OneCoin. No, Token Plus or Plus Token. I can't remember. There's 2 big scams, okay? The one token started off telling people that we are a replacement for Bitcoin. We have blockchain. They stole billions of dollars worth of people. Banks were involved. It was a global thing. And why did they succeed? Because people didn't understand the idea, understand the concept, what blockchain was, how Bitcoin works. So it's an open market. Enjoy, learn, but understand what Bitcoin is first. So I set up this website. If anybody wants to contact me, if anybody wants to learn how to get started with Bitcoin, I give personal training. I also collaborate with other people that want to set up some educational material and training classes. So you can contact me through there. Okay? Thank you.
Awesome. Very good job.
Thank you. Thank you.
Is there someone who gave you the idea to do a website like that, or?
No, I didn't know.
Okay.
It looks good, eh? I was surprised. I didn't.
Good job.
The built on fire, Chris.
No, really, very good presentation. I learned a few things, absolutely. And,
Thank you.
En français.
Okay.
Si vous voulez, pour la dernière édition de CryptoInMontreal 2019, ça me brise un peu le cœur, je vous invite à prendre un petit verre. Je ne sais pas où on va aller, mais ça va me faire plaisir de vous payer un petit verre et de faire un petit cheers avec vous en ce 18 novembre. Par la suite, pour 2020, j'ai pas d'horaire encore, mais si vous voulez m'aider à trouver un endroit à héberger, donc à avoir une nouvelle maison pour CryptoInMontreal 2020, faites-moi signe, ça va être apprécié. Et puis voilà, donc merci de vous être déplacés. Je vous souhaite un joyeux Noël, si je ne vous revois pas. Et puis je vous souhaite vous voir en 2020. Sur ce,
Merci.
à bientôt, bonne soirée.
Happy New Year, Merry Christmas, everybody. Thank you.
Good job.
Thank you.
That was awesome.
Thank you.
Yeah.